distinguished guests, ladies and gentlemen, I'm here to talk to you, as Richard says, about the digital transformation of retail and how retail all across the world is being changed by a wave of digital innovation. And it's really being driven by the customer and a change in customer habits. Before I get into that, let me very quickly just describe who I am and where I come from. So I founded a business called Javelin Group some 17 years ago to help major retailers back then in the UK, so people like Tesco and B&Q and John Lewis and others, to figure out what they should be doing in response to the entry of Amazon into the UK market, what they should be doing online and across channels to really take advantage of the wave of change. So I now run a business. Obviously, it's grown. The whole sector has grown. It's about 200 people. We work all over the world. We're very active in this region, and we are vertical specialists in digital transformation of retail. So we only work in retail, but we work with people across the sector, shopping center operators, retailers themselves, in some cases B2Bs as well. We have a multitude of different skills, from strategy through operations and technology. We work with many of the leading players in the market, as you can see there from a few of the brand names up there. And like I say, we work all over the world, so we're exposed to innovation everywhere. And really, the message that we are taking to our customers and what they are reflecting back to us is that customers are changing incredibly fast, and that retailers everywhere and the ecosystem of retail, including shopping center operators, needs to transform or it will perish. And as Bob Willett said earlier on today, many retailers in the most developed e-commerce markets of the world have already indeed perished because they haven't innovated fast enough. So people like Woolworths, people like Comet in the UK, to name just two examples. Now, the core of it, the sort of hard and most identifiable, most measurable center of it, is the growth of e-commerce penetration, the share of retail sales captured online. And this next slide basically shows the share of retail sales across many of the different countries in the world taken online. So right at the far left, you see Great Britain, which now takes about 12% of retail sales online, growing very fast, as you can see there. So in the dark blue bar is 2013, the red bar is the projection to 2018, and what you can see is that sort of declines the further east and south you go. So we have North America and Northwest Europe in the sort of band of 6 to 12% penetration today. In Central and Southern Europe and the developed Far East, we've got between 2 and 6% penetration. And then we've got some of the BRIC countries and beyond. China, by the way, is hard to measure because it depends what measure you take. But by any measure, frankly, it is now already very well penetrated and growing incredibly fast. We see that in the Gulf region, it is still at the relatively low end of penetration, but things are changing very fast. And what we know from our experience in the UK is that once retailers start to embrace e-commerce and start to invest in it properly, consumer adoption then happens very quickly indeed. Now, one of the things to note also is that because it is often the retailers, obviously, who have to make the investment in order to respond to consumer demand, actually the shape of e-commerce penetration changes quite substantially from one country to another. So here are just a few examples. On the far left here, you see a chart showing the penetration of e-commerce in the skincare and cosmetics sector. And what you see here is that South Korea, is massively well penetrated in this category. And that's largely because it has been embraced and owned. E-commerce has been embraced and owned by a few very innovative players. You can see the same in apparel here, where again South Korea is highly penetrated, but China rapidly on the rise. And finally, in consumer electricals, you see that the USA is really where the online share is most significant across all the countries. What this tells us is that it is largely down to the influence of a small handful of innovators in each country. And those could be very large retailers, or they could be startups, dot-com startups. It is down to those businesses to shape their markets. And there's a great opportunity here for early entrants and innovators to take advantage of this and actually create the market. And what you will find, I'm quite convinced, is that consumer demand exists, notwithstanding the joy of shopping in countries like this, for example. Now, Let me take the UK as an example of what's been going on, because the UK is, as you've seen, the most highly penetrated e-commerce market in the world. And I think what we can learn from the UK, we can learn some very useful lessons from the UK and apply them to other markets, as indeed we have been doing in many cases. What you see here is the UK's non-food retail sales across all channels. So back in 2003, roughly £150 billion worth of non-food retail sales, taken very largely through stores only. I'm looking at the far left here. In other words, without reference to the web at all. Move forward to 2013, and what you can see is that already 18% of non-food sales, so that's different from the 12% of all sales, I've taken out food now, but 18% of non-food sales are transacted online in a variety of ways. But of the rest, a very significant proportion is researched online before being bought in store. And then the rest remains store only without reference to the web. But that piece that is store only, as you can see, is in rapid decline. And in certain sectors like consumer electricals, that store only piece is now a small minority. What it means is that those players who have not embraced digital, who have not embraced online, are addressing a smaller and smaller market. Because as you can see from the top line there is little top line growth in UK retail, and there is little predicted in the coming years. Now, just a quick word about those online sales and how they split up. Let's look at 2018. What you can see is that the projection is that 28% of non-food retail sales will be captured online in the UK. And the majority of that will be online to home. It's what you will recognize as ordinary e-commerce, or shopping from home, either from your tablet or from your desktop. But a pretty significant proportion there in the royal blue is click and collect. And there's been a lot of discussion in the last day and a half about the importance of click and collect and how customers are embracing this. And I'm going to talk a little bit more about that. And then the remaining portion in the light blue is order in store for delivery to home. And that is particularly for retailers who might be presenting an extended range, who might not want to hold every single stock keeping unit in the store, but can give access to the lady who wants this dress in this size, but in blue rather than in green. Well, don't worry, madam, we don't have it in stock, but we can order it for you and it will be delivered to you at home. So many different ways now of shopping, and that's really one of the key trends, is that shopping has become more diverse, and it's really all about customer choice now. It's not that customers don't want to shop in stores anymore, of course they do, and for many shoppers, shopping is still a joy, but it is not always a joy, and it is not always convenient. And the opportunity really is for retailers to open up different ways of shopping and different ways of receiving the product to make it even more convenient for the customer. Now, what we see here is just how important this is becoming for certain retailers. So here I've taken a selection of UK and US retailers and just plotted them on the chart. At the bottom, you see their total retail sales in billions of dollars. And along the left, you see the share of those sales they are now taking online. And what you can see is there's a thick band of retailers between the 10% and 25% taking a significant share of their total sales online. And indeed people like John Lewis now breaking through it and taking nearly a third, in fact more than a third now, of their total retail sales captured online. And that's fundamentally changing the economics of retail and changing the way these retailers are thinking about their businesses. Now, I've got a video clip next. A gentleman called Sebastian James, who spoke at Javelin Group's conference a few months ago, talking about just how important e-commerce is to Dixons, the UK's largest electricals retailer. But not only that, he talks about how actually most customers are using both channels. And we're going to roll the next video in just a moment.
So if you're buying a large white good or a computer or a television, you are, and this data, by the way, is slightly out of date, my guess is this is higher now, you are 82% likely to spend part of that journey online. 82% likely to spend part of that journey online. But perhaps more surprising is that for people buying those categories of goods, you are 94% likely to spend part of that journey in store. And that shouldn't be very surprising. These goods cost, on average, a month's salary. They are large pieces of equipment which you're going to work with or live with or look at for between 3 and 5 years. And not surprisingly, most people would like to see them.
So there is a real symbiosis between these channels. Customers will research online before they come into store. They certainly will in this country. They have in every country in which we've worked where that proposition is put to them, where they are able to. You start by planning your journey online for the majority of purchases in the UK now. And as I say, this is now, this trend is emerging everywhere else in which we operate. That's a great boon for those retailers who have the scale to invest in the capital, to invest in the technology to address this. But there's no doubt that, as Bob Willett said earlier on, the world is a much more competitive place in addition. Now, part of that reason is because of this company here, Amazon. And you can see just how Amazon has grown. So what we've got here is the chart showing Amazon's total sales. To the dotted line, it's the actual sales, about $75 billion US, and the projection out to 2016. So they're going to double in the next 3 years. So if people think that Amazon has had its impact and we've all got used to it, we've all adjusted, forget it. Amazon's going to double in the next 3 years. It will probably double again in the 3 years after that. It is a powerful machine, and it is a huge threat to traditional retailers, especially those retailers who are not able to adapt fast enough. And part of the consequence of this, what this exemplifies, is that shift online. Some of that online shift is not going to bricks and mortar retailers, clearly. It's going to pure players. And what that means is that those retailers who are not building an strong online presence are facing this, a significant decline in store sales. So this, again, is what's happening in the UK as the most mature markets. But again, we're starting to see this in other markets. In the US, exactly this same pattern is occurring as well. Store traffic is in decline now in the US. A pretty significant decline over the last few years. And our projection is that by 2020, the UK will have 1/3 fewer, or 30% fewer retail stores in town centres and shopping centres than it had just 18 months ago. A really significant readjustment in the landscape of retailing. And this is particularly acute in one of the 4 key sectors of retail. So if you take the universe of retail, you can pretty much divide it up, or in non-food retail, you can pretty much divide it up into 4 key sectors. And the first really is distributor retailers, typically big box retailers whose main value added is logistics and supply chain and efficiency, if you like. The second category of retail is the vertically integrated author of its own brand. So the product and brand retailers, very typical in clothing and footwear. The third is experience and service retailers, in other words, exemplified by high-end department stores. And the fourth is convenience retailers, whose real advantage is proximity to the customer, so many, many small stores. And you can, as I say, divide up the universe into these categories. And when we look at the retailers in the UK who have been most affected by this channel shift, here, I don't expect you to read all of these, but you can see the ones in red are the ones that have either gone bust or had to reinvest and make significant adjustments to their business. And you can see there's a preponderance of them in the left-hand side there, in the distributor retailers. And that, of course, is where Amazon plays very strongly indeed. If all you're doing, really, is creating a supply chain to create access for your customer, actually, Amazon can do it better, it can do it cheaper, it can often do it more conveniently, especially for those out-of-town big box retailers. And so retailers in the distributor retailer category are having to reinvent themselves and find new ways of competing. But it's not just actually the retailers in this category that are under threat. In fact, if you're a clothing and footwear retailer in the UK, if you're in a shopping centre, once upon a time, you only had to worry about the other clothing and footwear retailer in the same shopping mall. That was your competition. But today, now that consumers are researching online before they go into store, of course, all other UK retailers are presenting their offers online, and those offers are just a click away. But equally now, US retailers are presenting their offer online in the UK, and they are just a click away. Equally, brands now, manufacturers, are going vertical and presenting their offer. And of course, the .coms as well, in a variety of forms. eBay, ASOS, Amazon, and many others are presenting their offers online. As Bob Willett said earlier on, the world now is substantially more competitive than it used to be. A tenfold increase in competition, at least, if such a thing were quantifiable. And the question is, how do we respond to this increase in competition? How do we respond to this new digitally oriented world. And it really comes down to 6 key things, 6 strategies. And the first really is you need a better offer. So, and of course that's always been the case, even before the advent of digital, but more so than ever before. You need to be more proprietary. You need to own the offer. You need to have it so that Amazon can't sell the same thing. You need to be truly distinctive and faster and better, so constantly refreshing your offer and bringing something new to market so that you are truly compelling, and of course at the right price, at web prices these days. You also need to be better branded and promoted. And that's because as more and more consumers are researching online before they come into the store, if you're not in their consideration set when they're doing that, you're not even in the game. They're not even going to look at your offer. You need to be front of mind, and that means really, especially in digital channels, you need to be exploiting social media, mobile, obviously online advertising, as well as all of the offline traditional forms of advertising as well. You need to offer a better experience, both online and in store. Much more inspirational online, better use of video, better navigation so that the customer can find your product. But in the store as well, the sort of digitally enhanced customer information and customer service, so you can really serve the customer how they want to be served. One example of that is a lot of retailers who've been investing online in customer ratings and reviews are now bringing that into the store so that when a customer is considering a product, the staff member can show them on an iPad, look, that's one of our most highly rated products in the store. That is a really popular product, and read the reviews. And that honest third-party opinion of consumers is worth far more than anything that the salesperson might say. But that's just one example. The next is you have to be more efficient, because this new world is all about operating at web prices. And retailers who've imagined that actually they can somehow draw an artificial distinction and say, all right, well, my consumer electricals offer is going to be offered at full price in the store and at a discount or at something less than full price online, and I'm going to try and keep a divide, perhaps by branding them differently. That's just an illusion. Customers will figure this out very quickly indeed. And the necessity now is to re-engineer the supply chain to be competitive at web prices. And finally now, because a lot of the costs are becoming more centralized, especially this investment in digital capabilities is quite capital intensive. Actually, retailers are having to get used to, where they can, operating at a more global scale so they can amortize those investments, certainly at a larger, more international scale. Now, all of these things are hard to do, and in fact impossible to do really, unless retailers figure out how to get better organized. And that means becoming much more customer-centric and much more digitally oriented. And that really means, of course, much more innovative as well. These things need to be brought at the center, and the organization really needs to be turned upside down. And we've already heard something about this, and I have a slide on this later on. In essence, retailers need to start thinking about themselves as 50-50 businesses. How would we look if we were reinventing our business, our retail business, on a blank sheet of paper, assuming a 50-50 split of digital and store? And that, you don't have to think of all of that 50% as being transacted online, but you can see that a lot of it is researched online before being transacted in the store. So think of yourselves, think how you would redesign your businesses in a 50-50 world, and what would you do differently? And that's often quite a good starting point and leads to some innovation. One of the things that retailers really need to do, and I've already mentioned this a little bit, is think about technology. Now, technology, the typical spend on technology in a typical retailer is about 1.6% of sales. If you look at what Amazon spends and what ASOS spends and what other e-commerce pure players spend, it's more like 5 or 6% of sales. And indeed, that's the kind of spend that we need to start thinking about. And I'm not saying we go all the way there, but as you become more multi-channel, you're going to start shifting from the left-hand side to some point further right, and therefore having to spend more on IT in order to get a single view of your customers across channels, a single view of product and stock. These things are absolutely essential if you're going to be a joined-up omni-channel retailer. The other thing that's been happening in the UK, and I don't say, well, this will happen here, but I just note it because it's interesting, is that traditional retailing has tended to be focused on one or two formats. Most retailers have got very good at operating a format, and in this case the example here is a high street format. Most of the sales are coming from the high street stores, a few from smaller and larger stores. In this new world, actually, what we're seeing is a significant shift. A lot more coming at the far left, in other words, online, but indeed fewer stores in the middle and a few bigger, better stores is what we're tending to see, at least in the UK. A flattening out of the bell curve. And that, whether you are a small format or indeed a large format retailer, actually what we would expect to see is more experimentation and more investment at different ends of the spectrum. And that reinvention of the estate is one of the things that we're definitely seeing in the UK. Now I have a quick, here we have an example of the shift to experience. So in Dixons, there's been a lot of investment in getting away from being that supply chain distributor retailer and being much more experiential, trying to create value in ways that we've already heard today. A lot of staff training so that the consumer actually feels that some value is being added above and beyond what they could get from Amazon or others. And one of the, and indeed here what you see is a new format store of Dixons, which is much more about sofas and iPads, where the retailer actually sits down, the sales assistant sits down next to the consumer to discuss solutions with the help of iPads or tablets of some sort to talk them through the design of their home solution, for example. We're, one of the things that has also been talked about a good deal today and yesterday is the importance of click and collect. And I mentioned yesterday at the panel session that many retailers of ours, people like clients of ours, I should say, people like Marks and Spencer, who now take, I think it's roughly £600,000 online out of their total sales. They're taking something like 40% of that through click and collect, or at least 40% of it touches a store in some way. Click and collect is a hugely popular customer proposition, and that's simply because a lot of customers are not at home to receive the delivery. They may go out to work. It's sometimes, we think of home delivery as a convenience. For many, it is not convenient. This, instead, is far more convenient. Many customers work near a store, or are happy to go shopping or walk past, perhaps walk past a store on their way to work. And this is a great convenience. And this has really taken off. And we see retailers devoting more and more space to click and collect. The big challenge now actually is queue management in many cases, because everybody wants to collect at lunchtime or after work. So we get big spikes in click and collect. This also, of course, assisting the customer through the digital device, that's the other thing. In-store ordering has become quite popular. But the real, if you want to choose between these two, the big win is click and collect. I think the next big wave, in fact, I'm certain of it, the next big wave in e-commerce and digital transformation is going to come through the handset, through the smartphone. And there's a huge opportunity in this region, and you all know this, so forgive me for preaching to you what you already know. But in the UAE here, we have, there are roughly 3 digitally connected devices per person. You lead the world in terms of the number of digitally connected devices. What that means is that many of you and your customers have smartphones. And that creates an opportunity actually to leapfrog elements of e-commerce, the desktop e-commerce in many cases, and to create completely new experiences. And this is where all the innovation is going on right now, and it's fascinating innovation. I'm going to share some of it with you right now. Now, let's just take a quick look at what's happening today in the UK, in Europe's 5 largest markets. You can see that in a 3-month period to August 2013, nearly 25% of customers surveyed had taken photographs of a product in a store. A good deal of them, many of them, had sent those photographs to a friend, to a colleague, to ask for their advice and share opinions. And others had scanned barcodes, we can probably guess why. Others indeed had compared prices online or admitted to doing so. So a lot of activity is now using the handset, even without retailers and shopping center operators having invested in very much utility here. So we see this going through 3 waves. The first wave has been to optimize transactional websites, to optimize websites to be handset friendly, to be friendly for the small device. And that more and more retailers have done this, because actually that's how customers are engaging these days, through the tablet and through the handset. The second wave is really creating additional utility through apps. And I'm going to give you an example of this right now. Many retailers have apps. Most retailer apps, I think, are fairly useless. They don't really create much customer utility. In fact, if anything, what they do is strip away functionality from the transactional website and leave you with something less. But there are a few who've used the device, the handset, to create additional utility. And we're going to see this in just a moment now with IKEA, who've really created something quite special. What you see here is the IKEA catalogue being put down on the floor. Just keep the volume down for me. The IKEA catalogue being put down on the floor to scale the image. Then the customer looks through the viewfinder of their smartphone and can see the product selected in augmented reality. So what you see here is this table that isn't actually there, but it's been selected from the smartphone, and you can see how it would look in your home. I think this is a really smart, additional value added. One of the key questions that people are thinking when they're buying from IKEA or from any furniture store is, will this fit? What will this look like in my furniture? Well, now all you have to do is to put the catalogue down on the floor, select the product, and you can see. I think that's brilliant. Now, one of the few examples, there are a few others, of real value added. Now, the next big wave beyond that, so we talked about optimizing your sites, creating utility through apps. The third big wave now is targeted relevance. And there's an opportunity now, and we're already now implementing this with several of our clients, to enable retailers to communicate directly with their customers. So the consumer downloads your app. You could be a shopping center operator, or you could be a retailer. They download your app, they state their preferences, they tell you when they are happy to be messaged and communicated with. And if you know that this customer shops regularly on a Saturday morning and it's a beautiful sunny day that morning, you can say to her, listen, we've got a special offer just for you. We know that you like outdoor foods. There's 20% off barbecues in your local store today. Come and buy it. Or this customer who you know is a sort of frequent shopper with you. You know that he buys a lot of shirts, but he's mainly bought long sleeve shirts. Well, now with the hot weather, we've got a new range of short sleeve shirts in this week. Buy two, get one free, special offer, come in and buy from us. So you can really start to rifle shot, target customers with very specific offers. And I think this is creating quite a significant transformation. Particularly, I think the opportunity really exists now also for shopping center operators, because shopping center operators have been excluded from the discussion to date. They've seen their retail tenants come in and communicate directly with customers, either through email or in some cases through messaging on the mobile device. But now shopping center operators can offer their customers an app to navigate the shopping center, and those shopping center operators can then curate offers from the retail tenants. I was in Dubai Mall, for example, yesterday. Massive space, hugely impressive, but frankly, to an infrequent visitor, practically unnavigable. I would have happily downloaded an app, stated my preferences. I like watches, I collect watches. I might then have been offered promotions from the watch retailers within that mall. And indeed, having spent there maybe 2 hours, I might have been offered a free coffee somewhere to encourage me to go upstairs to the food area, and so on and so forth. A real opportunity to drive more value from those customers each time they visit the shopping center. And of course, the same applies to department store retailers across many different floors. You know that a customer visits one floor, you want to encourage them to visit other floors, you can really use the device to encourage them to do so. And you can track exactly where they go through Wi-Fi, through beacons, and through towers. And the technology now exists to combine these three together so that you have a complete view of where your customer is, be they at home, be they at work, be they in the shopping center, or indeed in the store at the knitwear section of the store. And this is now being used by retailers to change the game quite significantly. Of course, this means now drinking from the fire hydrant in terms of data. Big data, well, this certainly is big data, and the retailers need to change themselves substantially to be able to absorb and make use of this. And that's really, let me just move on from this, and that's really the message of this slide here, which is the fundamental obstacle for most retailers is actually the organization. The traditional silo-based organization, which kind of pretty much organizes itself along the supply chain. You've got the origination of the product, the sourcing of the product, the distribution of the product. It's really all about product and supply chain. It's not really about the customer at all. We need to transform. We need to become much more customer-oriented and much more digitally oriented. I'm going to leave you with one last video clip. This is Barney Jobson, the Financial Times retail correspondent, talking about what is happening, a few months ago now, talking about how he sees retail transforming over the coming year. Let's roll that last video clip.
I think it's going to be a year of upheaval. We're going to see more retailers closing stores as they acknowledge that they've got more shops than they need, more shops than consumers want. And I think we're also going to see a lot of personnel changes at the top of the retail industry as old managers are kicked out and new managers with new ideas come in. We've already seen the beginnings of this just in the last year or so. Management changes, of course, at JCPenney, at Best Buy, also at Staples, at Safeway, at Toys R Us. And I think we'll see more of that as companies search around for big ideas. But I think the conclusion is going to be that not all of them can survive. Not all of them can survive.
I think that's certainly so in the most developed retail economies, in the ones that are already very mature where we're not seeing top-line growth. I think the opportunity here really exists in this territory to embrace this and to embrace the wave of change that's taking place. So I leave you with the thought that your customers are changing incredibly fast, and you need to transform faster to keep up with them. Thank you very much indeed.